All right, stock market technical analysis. We're going to look at the broad markets. We'll look at some individual trade ideas, and we'll get right into it. If you guys are interested in finding value in this content, feel free to join up on the private member group. Link in the description below. It's like $5 a month, so I'm putting out additional trade ideas, additional market insights, commenting in there, pretty frequently, a lot more than these videos. All right, guys. Dropping into the triple Qs, we basically have just kind of chop right now. We got the Fed coming out tomorrow, Fed day. So they're going to come out and basically tell us that they're not going to raise interest rates. They're not going to cut. They're going to just do nothing, basically. That's already priced in. I mean, it's like completely priced in. So they're not going to do anything. And then they'll come out in the press conference and they'll say something about how they're data dependent, and just very likely, I think it's very likely they're going to try to push back those interest rate cuts. Those are starting to get priced out, at least for the first half of the year. So I think they're going to probably try to push those out a little bit. So that's it on the Fed. And then the triple Qs, if I roll down, here's the hourly chart on the triple Qs. Nothing's really changed on the daily. We still have big negative divergence and breakdowns, but on the hourly, you can see we're just holding this support zone. All right, that's it. There's support. It's basically 433-ish, 80, 434, right in there. And today gap down. Yesterday's price action where it gapped up, I pretty much figured they just sell it down because right ahead of the Fed, you're going to see chop. There's not going to be a definitive move. Big institutions aren't moving big money right ahead of a Fed day. So the algos are just playing games and stuff. And in general, yesterday or Friday, we were at support. So they gap it up. You got resistance right in this area. I think it's right about 440. That's like the midpoint. And then the top of the range is about 446.50. All right. That's the top of the range up there. So in general, we're just holding support. There's no sell signals. There's no breakdowns today. Just gapping down, hitting support, and then the buyers step in. Gonna gap fill. So, I think we're probably about done with the move today. I can't see it going too much more, but who knows? We'll see. In general, we're just chopping. So we have to wait to the Fed to help us understand where the markets are going, after that. But look at the daily chart. That uptrend line, that's broken. All right, we were in an uptrend. This is going all the way back to October of 2023. So that's basically the entire rally that the market was kind of, hyped up on, especially the AI hype. That's kind of what this is all about. But there's your rally, and that trend is now broken. All right, completely broken on the triple Qs. To me, this looks like topping price action. All right, you rally up and you consolidate, or the bulls are saying we're just consolidating for the next leg higher, maybe, but the momentum is not. All right, we are clearly losing momentum, and that's what the PPO and the RSI are showing. They're showing that each new higher high in price is on less and less momentum. So, and now price isn't moving up anymore either. So to me, this looks like, it kind of looks like we're topping out and we're about to, start heading lower. So that's it. We need to see this, the next sell signal on the triple Qs really comes on a break of this support. Probably going to come. I don't know if it's going to come tomorrow on the Fed day, because they can do anything on Fed day. They'll spike it all around. It might just be a big chop day. But maybe after that, look at maybe Thursday, Friday, or Monday of next week. We'll see if we get that gap down or some sort of a move. I think we're going to get a gap down ultimately and kind of trap all this bullish price, these longs right in here with that sell signal. Same look on the SPY. Here's the S&P 500, the SPY ETF. There's your uptrend line, negative divergence on the momentum, and that trend has been broken, all right? I'm just saying we're just kind of chopping sideways now. So the uptrend is no longer intact. Doesn't mean we can't go on and make a new high, because they can spike it, and spike it up and put in a new divergent high. But in general, that uptrend line is broken, and spikes up. New highs will very much likely get sold into with the negative divergence intact. So it's just, if you see a spike, it's high probability they're going to sell into it, and down she'll go after that. That's it on the SPY. Here's IWM small caps. Again, this is going back to October, and you can see here on the IWM, you've got support all through here, and we have broken. All right, that's a sell signal and a breakdown, and we're just, kind of holding up because, again, we can hold up all the, pre-Fed. The market's likely not going to go too far ahead of the Fed, and, they can rally it up, but it's all just chop because, again, you're not going to see big moves taking place right ahead of the Fed. Okay, interest rates, 10-year Treasury. This is something that's very important to look at. TNX, look at that, boom, sitting right there at resistance. So that's that's kind of former resistance. You got the little pullback, rallied right back into it, and you're just sitting right there at resistance, very likely just waiting for the Fed. All right, so after the Fed, if we see a spike in yields, and you see a pop up, expect the market to start to sell down. All right, that's what I would expect. I don't know if that's going to happen, but if you do see it, then I would expect the market to sell down. So conditional, it's a conditional thing. Spike up in interest rates, market should start to pay attention and really start to go lower. And really, if you look at it, interest rates have been rising. We're making higher highs and higher lows. So the spike up would be the next high in this current uptrend line on interest rates. Oil's breaking out, oil has broken out basically. So you had former resistance right down here at about 79, 75 or so, and we're breaking out now. So, and I see the momentum looks good. You've got strong bullish momentum. All right, we're making higher highs in momentum, higher highs in price. So I just don't see any divergence. So oil looks like it's continuing higher. That's going to put pressure on the Fed. It's very unlikely to see the Fed cutting interest rates with rising oil because oil is inflationary. Oil affects it's the price of energy, it affects the prices of food, it affects the prices obviously of gas, it affects the prices of operating machinery, everything. And so the more oil costs, then they have to pass those prices on to the consumer. Okay, just quick little run through some of these sectors. XLF, financial sector, big bearish rising wedge there, negative divergence. And we've started to break down, but it's not impulsive yet. You can see we broke, but we're still kind of closing right on the wedge. Close really close, the close really close. We're right at that wedge. So in general, I consider this price action really about the same as if we were still trading in the wedge. They're still kind of hanging in there. So they're waiting for the Fed on this one as well. So until you see a big red candle, no sell signal, no breakdown on the financials. Need to see that big red candle here before you have a really a short on this one. Okay, healthcare. So this one is on a sell signal. You can see here on the daily chart going back to November. Basically, you have all these tags of support, and you have a breakdown. All right, there's your breakdown. Now, the Fed might come out. Maybe they're going to backtest after the Fed. That's completely possible. But it is on a sell signal. So if it rallies into resistance, that is an objective area to short. Very objective area, especially on a new divergent high. So if it can just barely pop over these former highs, do a backtest, very objective as a short for the next move lower. But that is on a sell signal. So that has broken. Here's XLY, consumer discretionary. You've got support all through here, and that one's also broken. Not moving impulsively lower yet, because again, it's waiting for the Fed. That's we're pretty much through the major earnings, and now they're just waiting to see what the Fed wants to do. So, but that's on a sell signal. So again, could backtest, completely possible. And XLK, again, technology, just a kind of a similar way to look at triple Qs, but you've got support through here, and that's broken right there. Not impulsively selling yet, but it is broken, so we'll keep an eye on that one. Okay, some individual trade ideas I pointed out recently. ELF, again, this one had a bearish engulfing outside day right there as it was hitting resistance. Okay, so there's your former, let me kind of roll it back. There's your support. Former support is now resistance. It hit that resistance pretty much perfectly with negative divergence and a bearish engulfing candle. So on a 1 to 10, that's a 10 for a short. And you just don't want to see this close above that topping stick. So that's it on that one. And then again, this also had a secondary support kind of right through here. You can see we kind of tagged it, held that support, and that's now broken. So that's on a sell signal. We should go lower there on that one. We've got, just look for kind of reaction highs. I think there's probably some support right through here. So that'd be a target right about 153.38. Again, that is a move from where we're at right now of about 20%. So I like that as kind of a short-term target. LLY also on a sell signal. There's your bearish engulfing candle. We have not had a daily close above that bearish engulfing candle, and that's all the way back in kind of middle February. So almost a month since that bearish engulfing candle, and it's been going sideways to lower. All right, a little bit kind of looks like it's flagging here, but in general lower. I'm waiting for the next sell signal, which would be, to me, a break of this trend line right here. All right, a big red candle breaking that trend line is my next sell signal, and I'm just kind of waiting for that. So yep, that one still looks good from a short trade. ANF still looks good. I think it's still a decent short. You can see here on the daily chart, rocking it up, that uptrend line. Negative divergence kind of traded to the upside, broke down. They're trying to kind of recover the trend line. You can see they're kind of holding it. Again, this will likely move on Fed Day. If the market sells off on Fed Day, this thing's going to break down as well. So to me, I think it's a breakdown, back test, and we're going to roll over. But they're making it look like it's holding back into support and holding. So if you want to be conservative, you could wait for that next big red breakdown candle for the next sell signal. And this one has really no support underneath it. So if it breaks, I think you're going to get a really pretty swift move right to the 200-day, likely a bounce there, and then ultimately down to this 49 level. All right, if I roll out, I think there's decent support there at 49. That's former reaction highs here. All right, you got a gap right there, so there's support. That's the target, about 49. Another trade idea I haven't pointed out quite yet, but ABBV, big healthcare stock. Again, support all through here. Negative divergence has been building for quite a while, and you've broken. All right, you broke support. So we're no longer moving up. It's very similar to the triple Qs. We're not moving up anymore, but we're not moving down. We're just kind of levitating ahead of the Fed. So I think we've ran off the cliff, and we're just floating in those kind of seconds before the Fed comes out, the Wile E. Coyote, before we drop. Here's a trade idea. I've talked about this one in the past, Affirm. So we were holding this support level right about 36 for a while. I was waiting for the sell signal, the break of that support. We did get it, clearly. This was a big down day. I think it was down about 20%. Oh no, it was about 12%. Big down day there. That's the sell signal because it broke support. As it broke, boom, big impulsive drop. I was a little late to the party by the time I saw it. My alert, I didn't have an alert, I think. It is rallying back up. So if it can rally back up into resistance, that would be an objective short right there at that 35, 35-ish. It's about 35.75. That would be that'd be resistance. You get that, that's great opportunity to short and down. You should go down to this 200-day and this trend line at 27-ish. All right, so a potential objective short coming if it can rally a little more up to this resistance. Or if you're just short, if you shorted it on the breakdown, again, that's, this is a back test. You could add to a short there. MPWR. I think I pointed this one out in the live stream. Someone asked me about it. This is the chart that I had. You can see support. All right, big gap up there and negative divergence building. All right, and it's actually been building for a while. This is there's a large divergence and then kind of just more pronounced divergence. And then obviously it broke and fell right to support. So again, you break, that's your sell signal, boom, right to the very first support, which is this gap up. You can see lots of reactions there. So I think we bounce here. All right, we're at support. Probably going to get a bounce. That will get sold into, but where's the bounce go? It could do a back test. There also is some resistance because you can see kind of former support right in there. So it's right about 697-ish. So we either going to do a bounce to 697 and then lower, or a back test. The full back test will likely depend on what the entire market's doing. All right. If the market's not really rallying, then you're probably only going to get a minor back test. If the entire market's rallying, you could get the full back test all the way up to this broken trend line. But as of right now, you're at support. So if you're shorted, I think it makes sense to cover that. And again, from the sell signal, that's down about 10%. So yeah. Okay, bunch of trade ideas. That's really all I have for today. We'll see how what the market really does after the Fed. And then we'll kind of evaluate at that point in time. So guys, if you're finding value, feel free to join up on the private member group. Link in the description below of this video, and I'll catch you on the next one.